With earnings season about to kick in, why don't we take a look at stocks that are expected to see the biggest moves on earnings based on their options? MKM Partners peering into the options market and found the names with the biggest implied moves in either direction. Those names are Overstock, Advanced Micro Devices, Under Armour, Netflix, and EA, Electronic Arts. Joining us now is Jim Strugger, derivative strategist at MKM Partners. Jim, obviously we can't go through all five due to limits of time, but let's focus on a couple of them. First off, Netflix. What specifically are you seeing in the options market?
So in Netflix, the option market is looking for about a 7% move when they report earnings after the close on Monday. We cover the stock. Rob Sanderson is our analyst. Focus here will be on sub growth in the quarter. We expect that to be above consensus. Importantly, a nice catalyst could be when they guide for subscriber growth for the first quarter. We also think that that will be above consensus, but even more so than potential numbers around the fourth quarter could be that first quarter guide. Important point on Netflix here is this is a secular growth story on a global basis. It's our favorite among the large cap internet companies in terms of potential market cap growth over the next several years. Stock's up 15% year to date. It's an intimidating name to come into ahead of earnings. So what we like to do, since we're in the derivative business, but what we like to do anyway, is structure a nice position around this to express long directional exposure without putting a ton of capital at risk.
EA also, based on the options market, could have what, 6-7% move around earnings?
Exactly, right around 6%.
Okay, so what is that, again, telling us sort of the same thing, but is there any way to gauge which way people think that it may go? It could go either way, right?
Well, that number, that 6%, yes, it absolutely could go either way. The important point, though, to make about EA as it relates to the option market is there has been a huge build in open interest of almost 400,000 contracts over the last couple of months, almost all of it biased to the call side. Very large bullish structure set up out sort of mid-year expiration. So, yes, the implied move could go either way, but the read on the activity in the option market is unambiguously bullish.
I guess the only way the other way you could read that would be that people are just hedging a short position with a call option, but that wouldn't show that kind of level of commitment, would it?
Well, in this case, they sold a put and bought a call spread, so you could argue that's possible. I would argue the opposite. The stock pulled back about 17% at the end of last year. They released Star Wars in November. There are issues around microtransactions.
And people were mad that you had to buy stuff
exactly
in the game.
Right. So you have a stock that's really underperformed, believe it or not, hard to find. So I would argue that that flow we've seen in the option market is bullish, and what we want to do is the same structure really in Netflix, which is a put spread risk reversal. You sell a put spread out of the money. We would do that in March. In the case of EA, it's a 105.95 put spread. You sell the 105, you buy the 95, right? And then you turn around and you buy the 125 strike call. It's a structure that looks somewhat like being long stock, but you can do it by committing significantly less capital than you would if you're stepping in and simply buying the shares.
I feel like we're on options action on CNBC, but I like it. Jim Strugger of MKM, looking at those names. We appreciate it, Jim, as always. Thank you very much.
Thank you.
Folks, be sure to check out the live version on CNBC's Power Lunch. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.